Let's welcome our next guest now. Anish Damania, Head Institutional Equities of IDFC Securities, joins us. Big day starting today, Anish. We have the rail budget today and then the union budget on Thursday. But first up, what are your expectations from the rail budget itself? We're just getting some comments, from the railway minister that the announcement on bullet trains will come through in the budget today. From a stock-specific point of view, would you buy any railway stocks now, expecting a lot of these reforms or announcements to come through?
So I think railway budget, which we are looking at, is basically more from the point of view of how the union budget is going to look like, because sometimes there are similarities which run. However, during this time, if you would have seen, already the passenger fare hikes or the freight hikes have already happened before this budget. So I'm not expecting any more news flow on that. So what would happen is that now we need to see how much they allocate for capital expenditure in this budget, because that is something which will show up as also in the union budget as to how their planned expenditure is trying to move up. This is one of those things where the government is trying to start the economy by spurring planned expenditure. On the second side, we'll see a lot more announcements of for the bullet trains, the diamond quadrilateral, and for some trains across cities. So that is something which we'll keep on seeing in this budget. Also, some sectors will see the 160 kilometers per hour top speed kind of trains also being introduced. So that is something which will happen in this budget, and that is something which we are looking at.
So in terms of the stocks, in terms of the capital expenditure, you said you would watch for how much the government allocates. How much higher do you expect it to be above and beyond the 30,000 crores that was outlined in the interim budget?
So I think we need to see as to how that figure is being moved up, in the sense that one of the reasons for our larger passenger fare hike was probably to provide for larger investments. So we need to see how that figure is kept up in this budget without affecting the railway deficits.
Well, Anish, what about the other normal rail favorites? Would you buy any of the Concors and the other stocks?
So Concor is one stock which is going to see, in the sense that Concor, we are seeing more activity from the point of view of how the business improves, because their action depends on how the availability of wagons is and how the EXIM trade improves. That is where Concor comes in. So I would say that to some extent, we want to see how much of the railway wagon availability becomes possible through this budget, through capital expenditure, and therefore allowing for a better size movement on the railways rather than on the roads. So to that extent, Concor might get impacted positively.
Okay, and any of the smaller rail stocks which are normally, high beta at these times, avoid, or are there gems in that?
So one thing, we don't follow those stocks, so very difficult for me to comment on them.
Okay.
What about this metro boom? There is a lot that has already been is getting done in several cities. It's possible that the NDA government will give it a further push. Anything related to that?
So if you look at the metro side, most of the equipment is imported. The only portion of which it is completed here is the EPC part of that. So you will get the EPC contracts for them for the favorites. So that will continue. I don't see that that has already happened. You see Mumbai Metro, now there's a talk of Bangalore MRT, and all that. More cities might get covered. For example, in Gujarat, Ahmedabad city went through this feasibility study for the metro project, but they found BRTS to be a better substitute. So I'm not so certain as to whether this will be replicated as a model across all cities, or what might happen. So that is something which we need to look into.
All right, there's an announcement on the exchanges from Mahindra & Mahindra that you're seeing on the screen. Nothing too alarming. It's just a proactive inspection that Mahindra is doing of some parts of the Scorpio X variant. So it's just a proactive inspection of some of the parts over there. But Anish, what about the budget itself? What are your pre-budget buys at this point, and how do you expect, or rather what would your advice be to investors before the budget?
So in terms, you're talking in terms of the union
budget, yes.
Yes. So we have, what we have said is that there are three clear things which we would like to see in this budget. First of all, the first thing is how the government accounts for the tax revenues. We are expecting a little bit sluggish environment for tax revenues at about little under 11%. Second thing which we want to see is that how does the government plan to cut the growth rate in non-plan expenditure. And fourth, third portion would be to see how they are improving the plan expenditure. And fourth is a fiscal deficit. So the scenarios are like this. In all the scenarios, we are looking at government aiming for high divestment proceeds at about 70,000 crores. But the first scenario, if the government comes out with a very high tax revenue buoyancy and then shows that okay, it will increase its plan expenditure, keeping fiscal deficit under control, I think this is something which you don't want to see, because we don't feel that tax revenues will be buoyant. So the government may not be able to achieve its targets. So it will be a negative. The two positive areas where we are looking at is where the government cuts down is okay with the tax revenues at about 11-12%, shows a 15% plus increase in plan expenditure and cuts non-plan expenditure growth rate, and shows a reasonable fiscal deficit, let's say 4.3-4.4%. Or the third step is where they don't cut the non-plan expenditure, and they show a higher plan expenditure through a higher fiscal deficit. So I think the second one is the most positive out of all the three options.
Yeah, Anish, but
the first one being the most
no, as a market man, would you even now top up on any stocks before the budget? Stock-wise, what is the approach?
So in terms of stocks, basically what we are looking at is, as a theme, we are saying right now we have been more positive on the pharma and the IT being the sector rotation, and that is something which will continue for some more time. However, looking at the budget, if let's say GST roadmap becomes a lot clearer than what it is, then we look at a lot of stocks in the auto space, some of them in the consumer space as well. So that is something which we look at, but that will be mostly post-budget than pre-budget.
So you're expecting a peak off on budget day? I mean, since you have the cyclical, rotating out of cyclicals into defensives, is your feeling that the indices might hit a near-term peak and IT and defensives would be the way to go? Would budget be that day when the markets might peak out, the cyclicals?
Very, very difficult to say, Lata, but it looks like that kind of thing might happen. There is a possibility of that thing happening. As I mentioned to you, if the government shows that it is committed to increasing the plan expenditure by cutting the non-plan expenditure, then I think there is more legs to the market to go.
How are you approaching Infosys ahead of its numbers? What is the expectation from the earnings this time?
So I have not seen that very recently, but I think we are okay with a kind of 11% growth for this year.
More generally, you said you would prefer IT, pharma, the defensives. Anything that's top of the mind in terms of what you would even chase?
So basically there are three stocks which we look at in that order. First is Tech Mahindra, second is TCS, and the third one is Infosys. So it will be in that order which we'll pick. And fourth one will be HCL Tech.
Okay, the top IT triumvirate. On that note, thank you very much, Anish Damania, for joining us ahead of two major events that the market is waiting for.